evening, everybody. And you were all wondering how we have good food at the lake. That's me out there early in the morning catching fish for breakfast. Oh man, I just do it all for everybody. Yeah, this is right off our deck. And this is what you look like when you get educated there. Whoops. There we go. That's a candlestick crowd. Okay, let's see what we got going on here. Oh, so, yeah, Murphy's Law. It looked like we had one spot open and we filled it this afternoon. Now we've got another spot that's a maybe. So we might still have one more spot available at the lake. And the reason I'm pushing it so hard is to have an empty seat. I mean, I'm going to be talking for 2.5 days, and I don't know, everybody that has come to the lake, when they have left it, they have become dramatically improved investors. So to have an empty seat up there, when somebody can come up and learn how to dramatically improve their investing, I just hate to let all that wonderful education just go flopping down into an empty seat. So here's the scenario we've got to kind of look at. When they broke out through the resistance level of the last few months, see if I can do this well. That. There we go. Yep. Well, you can see over the last 6 months, there's kind of a resistance level here, which this is extended out even further. This was a big, maybe if I go to weekly, how's that? Weekly, all right. So when they had this run, then this run, and then this run, and the reason I say this run is because we can see what happened right here, and we can see what happened right there. I'll make it a bit bigger. But on the daily chart, we had kind of that J-hook pattern breakout. So it wasn't like there was this great exuberance breaking out into new territory. It was kind of a controlled pattern type up move. And we can also see that the pullback so far in the Dow has not gotten them back down below the, oops, I did that wrong, back below the T-line. That was the S&P 500. That doesn't, is that what happened there today? Maybe it was the NASDAQ. It was more compelling, up 57 points. And then the transportation index up 16, also well above the T-line in this uptrend. So the reason pointing all this out is we've got the indexes trading indecisively and or trading back above the T-line. Even though it's not a rip-roaring market, it's just a slow, steady market that is now in the overbought condition that is not getting there with exuberance. It's just a slow, steady uptrend. So the rationale of that would be when they broke out into new territory, there wasn't a big, huge blossoming of price moves. It was still a nice steady uptrend without the recent high creating, or the resistance level creating any problems. Let's see, crude oil, gold, they're all moving sideways. The only good commodity chart that I'm seeing right now is probably live cattle. Came up, now did a little morning star signal, that little scoop pattern. Where's the next likely target? Up here. So trading in the futures, that's the spot to be. The other ones, soybeans, can't really tell which way that's going, and gold, slow uptrend, but not going with any great vigor. So right now, it is the market that just has a consistent flow of bullish investor sentiment. SP, yes, I do. If it's doing something, let's say hypothetically, which I didn't do today. Let's say I bought feeder cat or live cattle today, and it closed right here. Yeah, I'm going to hold it overnight because that tells me I've got a pattern setting up. Now, if I was long and it closed something like this, not knowing whether it was going to back off, now I'd probably close it out. But if I can see a pattern that I can recognize and it's moving in the right direction, yeah, I'll hold it overnight. And then there's times where if I've got a trade going, I'm holding it all the way down to probably in this area. Okay, let's take a look at some. The ones we recommended, VC was one. Get rid of all these. And we could see the type of pattern. Wave 1, wave 2, going into wave 3. I'd still be a buyer of this one on positive trading because if it's supporting right here off the 50 after coming up through, where do you think wave 3 could take you? Right up in this area. The steady eddies, you can see the fry pan bottom on stone. Just stay long on this one. Stay, just a nice steady eddy, as long as it stays above the T line. And the silver stocks, this is why being able to identify not only the pattern, but the sectors that are acting well, pause has been working very well for us. And when you look at the other stocks in that sector, in this case gold, SA is working well. AU has working a little saggy today, but when you can see that there's a whole sector working well, again, if I've got 10 positions on, I might have 2, maybe 3 positions out of my total in that sector. So if the gold and silver stocks are acting well, might have 2 or 3 in those. If the oil stocks are acting well, I might have 2 in there. So maybe 5 out of my 10 trades or positions are in maybe 2 different sectors, mainly because we know those sectors are acting well, and then have the other ones interspersed to other sectors. Nava Gold, you can see the J-hook pattern from here. And you can see this is such a good, strong pattern setup that they came up through the resistance level, and then look what they did, a left-right combo right on the 50, telling you if they weren't taking it back, that usually implies you're in the right direction at the right time. Crocs, still moving in the right direction. Oh, I don't really go as far as a wave 5. I mean, this to me is one trade, end of trade. This to me is the next trade setting up, so this becomes wave 1, wave 2, wave 3. If you're looking at it as Elliott wave, yes, but the problem with Elliott wave is he even said himself that the wave count is so nebulous that it could be wave 7, wave 9, and then the ABC pullback. So because I'm not going to hold this for the whole uptrend, I might be buying here, selling here, buying here because of this pattern, maybe selling on a severe sell signal, but then might buy back on the next wave. KPTI, another one that can still be bought. Look at your Morningstar signal right here at the 200, staying above the T line. If this trade's positive, you can see the type of pattern setting up. FUL, evening star signal. So now I've gotten to the point that if this was my good J-hook bobble breakout, and I've got an evening star signal, remember what the number one criteria for any buying or selling is. What is the signal? So if we're expecting maybe a wave 1, wave 2, wave 3, this outranks what we're expecting. This is telling you there's some selling occurring, and you don't want to see it close back below the T line. Yeti, same scenario. Morningstar signal, but then a bearish engulfing signal. Stochastic's heading down. What becomes our criteria? If we're long, it better open positive and trade positive. If it opens lower, this pattern has disappeared. Now we might be in this trend. We're still short this one. Because of the bearish doji sandwich, it did open positive today, but didn't move, and we weren't quite in the oversold area. At this point, though, with the doji, positive trading, not backing off too much, we'll still use the high of the doji and today as a stop. Because if it came back up through there, what's it telling us happening down here in the oversold area? We're starting to see some buying in this area. Oh. Okay, here's our option trades. Look at Micron. Where was our bobble breakout? Right there. Makes this a very high probability trade setup. Look at our setup. Whoops. Right now, we recommended this one to the as an option trade. Look what Western Digital's doing. If it opens positive, what do we got going on? A bobble breakout J-hook pattern. Now remember, a bobble breakout can occur at a moving average or a resistance level. So if this breaks out, Jim, do you still have your microphone on? I'm hearing something. Okay. Good. I just thought, it was my stomach gurgling again. So if this breaks out, what do we expect? Well, if this is wave 1, maybe wave 3. Or if this is wave 1, This is wave 3, but what does wave 3 tell us? It's breaking out and giving us a good uptrend possibility. We've got our calls right now on Roku. Another one, when it broke out with the doji sandwich, we bought one set of spread and another set of spread. If this closes above 110 on this Friday, that means the call spread that we bought, the 105, 110 that we bought for $1.77, will turn into $5. Is everybody having... Kenneth, if your sound is cutting in and out, hit the red X up on the top right and then come back in again. Maybe you can get a better connection. Okay. That was Roku. We rolled over our XLNX. Had good profits, and now we've rolled them over to August. Where's the likely target? Right back up here and possibly back up into the gap area. OLED also has been a good trade for us. Look at the left-right combo right here. Look at the bullish Harami right here. What'd that tell us about our T-line? They're staying above the T-line. Notice what happened today. They traded it down and brought it right back up above the T-line. This is why always wait till the end of the day to see what's happening, because the longer a trend stays in place, the more compelling the reversal signal needs to be to tell you that uptrend has ended. So here's one kind of illustrating that. Look at your fry pan bottom. Look at your breakout area right here at the 50. What happened the next day? A big bearish Harami. Now, the bearish Harami brought you right back to the T-line /50. So this made for a perfect exit if it didn't open positive and trade positive. If it did open positive, you put your sell stop immediately below the close, because logic says if it opens here and trades, let me make this bigger, trades back down through here, what color candle do you have going on? Oh, you just roll over by, you close out your July options and then you purchase August options. So the, I forget which one. We had the July, we actually had July the 19 weeklies last week. Or I guess it was Friday. Last Friday was the, so we had good profits in them, rolled them out, and then went to August. Now, obviously not the same options. We went with different spreads up further. Yeah, options are much harder to set stop loss. The stop loss should be contingency orders, meaning if you're long the calls, and let's say you don't want to be in this anymore, if it comes back down, let's say through the day's open, because you're getting up toward the overbought area, like over here, you put in a contingency order that says if it trades back below, what was the open today? 22.75, sell my options. Now, the problem with that is they're going to sell them on the bid side. If you're sitting here watching it, you already have a mental stop loss that says, if I'm long these calls and it trades back down through here, let me get out of those calls as best as possible. Brad, I'll have to look them up. I forgot which ones they were. And I think I just mentioned them in the chat room a few days ago. Okay. Tony, yes, and yeah, so we don't get too far off on the option topic. I am in the process of doing a full-fledged option training, identifying the difference between when you buy calls or when you buy a call spread, when you buy a debit spread or when you buy a credit spread. I'm going to try it. It's probably going to be maybe the middle of August. Where are we right now? Yeah, we only have a week before. Yeah, we still have to do the entry and exit strategies. It'll probably be mid-August when we come back from the lake. Okay, so I don't want to get too much off topic, but I know a lot of people are interested in the options, and just like my, I guess, modus operandi, I try to keep the option strategy as simple as possible, because if you're analyzing your chart movement or your stock movement, the first criteria is you don't want to be spending all night figuring out which charts to go after. So you make that as simple as a scanning process. And then once you find the charts, you don't want to be spending all night trying to figure out which option strategies. Tomorrow evening here will be. Oh, is tomorrow it? Okay. All right. I will probably concentrate on the spreads tomorrow because that's the most effective strategy, and it's the simplest one. Oh, that's way too sophisticated analysis. Plan on spending one half the WIP? No. Oh boy. Let's do this. Ed, we can do put spreads. All right, let's do this. If you will all promise when we get to the double line, you only do one stock request, I'll spend 10, 15 minutes when we get done with all the stocks going through the math on some of these on spreads. Is that all right? And this will also be educational to the people that aren't doing options right now, just kind of taking a look how easy it is to correlate the option trades with candlestick stock trades. All right, here's why you put your stop losses in. This is why I always have a safety stop just below the T line. What did this look like? There's our classic fry pan bottom J hook pattern. Where should it not trade? Takes 7 to 10 seconds to type in. If it comes back down through this level, close me out. August 20th is okay. So what do I got scheduled for tomorrow night? Call options? All right. Okay, so that's when we're going to be doing it. I'm glad I checked my own calendar. Okay, some of the biggies. Nugget has shown us that the gold stocks are still working well. Apple had a good day, but notice what the strength of the trend is. Really nothing. So even though it's above the T line, it really didn't do anything great today. But so this becomes a very kind of lethargic trade. It wouldn't be my most favorite, but if you like Apple, you can stay long. Facebook apparently has earnings coming out. It looks like it's wave one, wave two. Look at the bullish flutter kicker putting you into wave three. Now you've got wave one, wave two, maybe starting wave three also. NVIDIA is right on the cusp. You can see that on Friday it had a left-right combo right here at the 200. Obviously some profit taking. What did we need to see today to stay long? If you were long, you needed open positive and trade positive. Just very simple if-then deductions. Amazon, bullish Harami, right here at the T-line. If Amazon opens positive tomorrow, giving you a J-hook pattern, that'll be not only good for Amazon, but that would be probably good evidence that one of the stocks that everybody is watching and is in the news all the time is still trading positive. That's a good indication that the bullish sentiment is still here in this market. Steve, if you closed out NVIDIA because of the left-right combo, that was the right thing to do. Now, your decision is a new trade decision. Decide whether to get back into the position or not. Tesla, still in an uptrend. And Netflix, we've got a couple of the guys in the options room that were in the puts. They're having to send everybody candy and other stuff. So they've made obviously some big profits. But this is just kind of your observe the obvious. If this is your resistance level, and this is your indecision, and there's your close below the T-line, where do you think the next target was going to be? Probably back down here. When would you close out the trade? If they close back up above the T-line. And you participated in something. This is kind of the point I like to try to stress, that when you have a signal and all the elements, all the indicators confirming, like a short, that tells you your probabilities are greatly in your favor for being in the right direction. We saw that same scenario in LCI today. Look at your Morningstar signal, and it opened positive. Well, every day you get a big move like that? Nope. You just put yourself in situations where the probabilities of being in those trades or in the good trade is greatly in your favor. That was Netflix. I guess we did all the biggies. So, Boeing, look where it's running into problems. Right in this area. So, this is why the visuals of candlesticks is much better, because if we've got a bearish Harami right here at this level, that gives you, if you're trading this one, gives you a lot more clear perspective of what you should be doing if this opens lower tomorrow. It means they failed at this level. Baba still in an uptrend. Chipotle. Where did this? What did this tell you today about the fry pan bottom? You had a sell signal and a close below the T line. You should be out of this, because what's your trajectory on Chipotle? Not very good right now. Jeremiah, if you see something where it's going into earnings and it's not giving you a very conclusive indication on the candlestick chart, yes, remember, you're using the candlestick chart to get a benefit of knowing what the investor sentiment is, right up to, it doesn't matter what the investor sentiment is being created by or from. They're usually doing exactly what they think is going to happen going into earnings. No, I wouldn't buy LCI now. It was up 45%. If you see something like this, now, you can kind of speculate, maybe you're in a 45 degree. That becomes a different chart analysis. But you're up 45% today. Now you go into your next analysis of what would you expect from here? A 45 degree if it opens positive and trades positive. What we want to do is be able to have a high probability factor of what should happen based upon a pattern confirmation. So in this case, Kemet, you can see what happened right here at the breakout. Now we can kind of calculate wave 1, wave 2. Notice what the reversal was. A doji, not confirmation, then a bullish engulfing signal. This was telling you once they broke through the 200, they came back and used the 200 as a support area. This is just very simple visual confirmation of doing exactly what, or not exactly, being able to quickly identify what type of investor sentiment is occurring at that's forming a pattern or at an observable technical level. So something like Halliburton, you can see what the pattern is. There's your Morningstar signal, best friend gap up. Where do you think your next target is? Good evening, Ahmed. Probably back into that 45 degree. Why? Because look at your doji gap up, your best friend. So not every trade is going to work. That's part of knowing what to do. If you were buying this one on positive trading today, because of the bullish flutter kicker, if I was buying right in here and it traded up here, you just put your safety stop at where it opened, because logic says if they had enough selling strength to come back down through there, something's wrong in River City. So not every trade's going to work. Now, there are some that are high probabilities, but that doesn't mean every trade's going to work. I have, I've always had the mental stigma of, man, this trade should work. You analyzed it. It's got to work. Well, in my older age, which was not too long ago, I always put a safety stop, because I've discovered that, Three Rivers City. I've discovered that every time I put a stop at a place that it shouldn't trade, probably 90 to 95% of the time I'm happy I stopped out. And then I can mentally rationalize, knowing that 1/3 of my trades probably won't work, that I got out of a trade that didn't work. And so that didn't weigh on my own emotions. That just told me, I was doing what the probabilities told me. Got a little bobble breakout on QTT. Came up, failed. Look at the big reversal signal right here, reversal, and then your T-line crunch. I wouldn't be afraid to be buying QTT right now. So, Ahmed, there's an old saying: if you're doing what you like doing, you won't be working a day in your life. RYAAY. Look at the doji gap up. If this opens positive, what do you got going on? Here's your bobble breakout. Where do you think your next target's going to be? So these type of observations not only put you in situations where you have a high probability that you're moving in. Oh, for crying out loud. What is this? Wow. I don't know why GNX. GNX was going to be one of the favorites. I don't know why it's not coming up. But look at GNX. It's a good bobble breakout situation. Here's another one. Oh, and you look at your bullish engulfing right here. This is why I like to look back at charts, because you can see the obvious signals at the reversals. Probably there is no GNX. What the heck was I looking at? GNK. There it is. Okay. Oh, somebody has terrible handwriting. So, what would happen on positive trading tomorrow? We have kind of a bobble breakout, J-hook pattern, classic fry pan bottom, J-hook coming off a Morningstar signal back up through the T-line. Where do you think your next target's going to be? 7 to 11, 11 to maybe 14.5, 15. Another kind of breakout situation. Morning, there's your bullish Harami. So this is why the ABCs of candlesticks is learn the signals, then learn the patterns, and then qualify them by which are the top ranked signals and patterns, the ones that are going to create the most powerful pattern setups. For crying out loud, I can't get correct trades. CLDR, fry pan bottom, just very visually recognizable. That's the right word. J-hook pattern on RX. Wave 1 was 15 points. That could take you up to the pretty close to the $50 area. Now, again, that's the calculation based upon wave 1, wave 2, wave 3. Will it get there? Your analysis now becomes you stay long until you see a sell signal and a close below the T-line, or a sell signal that is too far away from the T-line. There's your cup and handle. Where did this support? Right smack dab off the 50. Where is it breaking out? Right there. Where's your next target? Where everybody else might be watching. Diode, kind of the same scenario. Where did this get a big boost? Right there at the breakout level. So this is the advantage. Now, I say this is the advantage, for me anyways, is to recognize a pattern and the signals that are occurring right at that breakout level. That's what's going to create the strongest price moves on a short-term time frame. Look at our doji sandwich on this one. Notice how this one started out. There's your message. There was your confirmation that the profit taking was over. There was your profit taking. Kind of started with not quite a bearish engulfing, but strong enough to say it's coming back to the T line. Doesn't have to be a bearish engulfing signal. If you're in the overbought area, where do you put your stop? At the open of the previous day. Because if you're in the overbought area and you're starting to move away from the T line, logic says if they come back down through the previous day's open, who's taking control? The bears are taking control. Now we got a doji sandwich in the oversold area, closing above the T line. High probability that you're heading much higher. What is that? Oh, inverted hammer. That was different. Different charts have different signals because they may not all have the exact same feed to give you the same opening price. Here's another one to keep an eye on for a bobble breakout or J-hook type situation. BRFS. If this is wave one, now you've got a spinning top gap up. If it breaks out through this level, what's that telling us? Wave three is probably going to be pretty strong. Apron. Oh, man. If this comes back up through the 50, what's it telling you? They broke out, they pulled back. Now look for another strong price move. And I say strong price move because some stocks are going to move steady. Then there's times where that price is going to start whipping around pretty quick. So if this opened positive, where do you think the next potential target could be? Up here. That gives you 6 points on a $9 stock. That's a 75% upside potential. Oh, pshaw. ATOS. Recognize this pattern. There's your little mini scoop pattern. Want to be buying this one. There's your classic fry pan bottom J hook on salt. Lots of shipping stocks. There's your J hook pattern. Notice your doji bouncing right off the 50. Wave one, wave three. Up another 30%. Oh, there it was, way down there. ENK. Your shipping. You just needed to hunt for it. There we go. VHC. Kind of a fry pan bottom J-hook pattern. Hold on to your individual ones until Jim does the double line. And remember, only one tonight because we're going to work a little bit on how you can dramatically improve your returns by using simple math deduction. DRNA. You can be buying this one, especially positive trading that eventually breaks through this level. We're going to be doing the math on spreads. HX. Now, after all that, it's not the right symbol. GEHX. There we go. Morning or a bullish engulfing. Right smack dab off the 50, close above the 200, breaking this downtrend. at least coming back up here, then possibly coming back up to the top of the channel. And all this Quark Crown Holdings. There's your belt hold, followed by a bullish doji sandwich. Where do you think the next target's going to be? The top of the channel. Okay, so the reason I'm kind of looking for a big move in the market is because for 18 months we were stuck in this sideways channel. Then over the last week or so, a J-hook pattern. Is that a J-hook? J-hook pattern, doji sandwich confirmation broke us out through that level. So not so much that you have the pattern, but the fact that everybody knows we're in new high territory and they're not really selling it off. They're still buying up here. Okay, let's do a quick review on why spreads work better. Now, we're going to have to do a little bit of past analysis here, just because I've got those numbers written down. But in the options room, this one was a very good one. When the stock was trading, I think right as soon as it did a bubble breakout with a kicker signal, that couldn't have been it. Somewhere down here, I'm trying to think of where it was. We were buying the 110 for $4.20. And, I'm sorry, wrong list. We were buying the 115s for $4.20. So probably right in here. And we were also buying the 115 calls and selling the 120 calls. Okay, Brad, yes. And we were buying that spread for $2. Now, somebody was asking, that's right. Somebody was asking whether you need to buy it at half. I always use the figure that if I'm going to buy a call spread that has a $5 difference, that I don't want to spend any more than $2 because of the extra risk factor built into options, which is the bid-ask spreads, the additional commissions, and then not only do you have to be right on the price trend, but the magnitude of the move. So if you just do it where you're putting in $250 to double your money, the probabilities are eventually in the long run going to go against you. That is up to each individual also. Now in this case, there's a lot of options that if you look at them, the volume on the weeklies may not be big enough where you can get a good price on a spread. You still need somewhat good liquidity. And I think we were buying back here, we were buying the July calls, which were about 3.5 weeks, 3 weeks out in front. And so your risk factor now becomes how far out do you go and at what spread price? Well, because we bought the 115s and sold the 120s for $2, or we had to pay $2 for it, that meant it only had to go to 120 for us to have that spread go from $2 to $5. And or anything above 120 also creates that $5 spread. So let's say the stock finished up at 118. Well, your what did they say? Your 115s would be, no, I did that wrong. Let's say it finished at 125. I'm just going to pick out a number. Well, that means your 115s are now worth 10, and your 120s are now worth 5. So you're selling your 115s for $10, and you're having to buy back your 120s for 5. It's still going to net out as $5. So what actually happened was, I think we closed these out a couple of days, or right in here, a few days before expiration, and we got $4.60 for our $2 spread. Now, Facebook was a different situation. We could see the J-hook pattern, and it broke out, and on June 28th, we bought the July 195 calls for $4.20. But a little bit more conservative, we bought the 197.50s and and sold the 202.50s. That spread, which was $4, for $1.50. And then, to be a little bit more aggressive, we bought the 197.50s and sold the 207.50s for $1.93. So when it came to expiration time, or a few days, I think it was right in here, it was right in here, because I forgot that I thought Wednesday was Thursday, and I only had one more day to go. SP, no, usually the brokerage firm that is doing the spread, if somebody's going to assign you, they can pretty much say, hey, this is in a spread, and they go someplace else. But the worst case scenario was if somebody ever assigned you your short calls, you just go and exercise your longs and just convert it. The only problem with that is you get charged an extra commission. So if I've got something, I would say that 95% of the time, I'm going to close out the trade either the day of expiration or the day before expiration. So the reason for doing a spread is in this case it worked out pretty much the same. The July 195s, we closed out eventually at 8:30. The 197.50 to 202.50s that we bought for $1.50, we closed out at 3.78. And the 197.50, 207.50 that we bought for $1.93, we closed out at $5.50. Now, there's a couple advantages for the spread. First of all, obviously, you've got less money exposed. Yes, so if your price is way above the top of the spread, more than likely you're going to close it out because it's going to be pretty close to your expiration, or your if you bought a spread that had a $5 difference, and all of a sudden it's trading $12 above your let's say you bought a 105, sold a 110, and it's trading at 122, more than likely 2, 3, 4 days before expiration, you're going to be pretty close to that $5 maximum. So if you can get out at $4.85, you take the money and go on someplace else, because there's no sense for 15 cents, risking holding it for another 3 days. So the advantage to a spread is, first of all, you've got less money exposed. Secondly, your break even is lower. And then third, the price movement doesn't have to be nearly as much as buying a call outright to make the same percentage return. So I know that's all kind of nebulous without having the numbers here in front of us. But I guess tomorrow night I'll have the numbers in front of us. So right now we're in Roku calls. We're just about ready to buy. We're in Micron. We bought the 45 weeklies. Didn't even see what they did today. We bought the 45 weeklies that expire on August 2nd. So another week and a half, 2 weeks out. We paid $1.40 for them. I'm sure they must be pretty close to $3 over the last couple of days. $2.84, okay. Thank you, Brad. And then we also bought the August 46s and sold the 50s for $1.03. Now that gave us a lot more time for this stock price to get up to 50. So it's now at 136. Yeah, so we bought those at 103, and it's 136 right now. And if they keep moving closer to the 150 level, that $1.03 goes toward $5. Okay, this will be much more clear. I forgot that I didn't have all the numbers up. The 46.48. Yeah, that one. When I first looked at it, the 46.48 spread was at 55 cents. That would go, if it goes to 48 or greater, your 55 cents goes to $5. I'm sorry, $2. The difference between the 46 and the 48. All right, I forget that without the numbers in front of us, it's hard to catch on. But the important factor of the spreads is less money exposed, much lower break even, much greater percentage returns, and a lot more protection on the downside. Okay, so are there any general questions on candlesticks? I'm still getting calls about the lake. I guess we've got a spot that is a maybe right now. But pretty much one Oklahoma guarantee, which is when you get done with seeing everything in a chronological order, chronological as well as logical, when you get back, you'll be looking at your trades with a much more insightful perspective, and that sessions like tonight will not be learning sessions; they will be more confirmation and reinforcement of what you already have seen. On a straight options call, usually if I'm looking at a straight options call, it's on the basis that the only call that I might be able to get is a monthly call, which may be 3, 4, 5 weeks out, and it has a big an Oklahoma guarantee is that if you don't see your investment perspectives change dramatically, I'll be a son of a gun. That's an Oklahoma guarantee. So if I think, let me figure out one. If I think, maybe it's Western Digital, is it? No, there was another one. I'll find it. No. Well, Shuzbots. There was one that I saw. Oh, what did we recommend? Maybe it was Western Digital. Oh, yes, because if it moves from here to here and wave 3 is the same magnitude, I'm buying just the calls on the August 55.50s, I think for about $2.80, because if this move is big, like we expect, I could move that $2.80 to close to $20. Jeremiah, I bought it by the calls that I look at, which takes a matter of 45 seconds to a minute and a half to see which ones make the most sense. Now, I'm not doing deltas at all because, as you can see, let me find something that would show, as you can see, even on this one, you can see that the delta probably got much smaller right in here until that big breakout. What strike do you pick for calls? AP, that's also a function of each person's risk reward. So right now, we've decided to buy the 55.50 calls for $2.86 with a big upside potential. But if I went back and looked through it, maybe I decide to buy a 60, 65, and I'm just going to pick out a hypothetical number. Let's say that's an 80-cent spread. Well, for 80 cents to go to $5, that's a good risk reward based upon our pattern. If I want to be a little bit more conservative, maybe I do a 57.62. If I want to be a little bit more aggressive, maybe I do a 65.70 that I have to pay 30 cents for. That if this does move, that 30 cents turns to $5. Bought the the August weeklies on Western Digital. Where do you get out of your calls if the stock goes against you? Remember what the options are. They're just a method for buying the stock. So if you saw a chart that told you it was time to get out, which one was it? It told you it was time to get out, you'd sell the stock. Well, if the options are just a method for buying the stock, you sell the options. RP, yes, I can do that. We are going to be doing a full day training session on options alone. Again, going from all the different strategies, the spreads, the put spreads, when to buy a debit spread, when to buy a credit spread, and then other strategies like when do you write calls against your position, or when do you buy a put if you have a position. Let's say you were holding Netflix long term and you saw it backing off, you might decide to buy some puts to protect your position just in case something like this does happen. Whoops, I've talked way over time. And I'm still getting private messages on the lake. Yes, you'll get the Oklahoma guarantee if you come to the lake. What you'll find, and even you'll see there's quite a few traders in the room that have come to the lake, and they're the ones that say that their trading has improved dramatically. And they're the ones that will say, when they were done with the 2.5-day session, it was just like a light had come on. That all of a sudden, everything they had learned previous to that, which was kind of bits and pieces as they went along, kind of just got washed out of their mind. Now they're looking at a completely different perspective of how to trade successfully. Okay, I guess with that, Jim, go ahead and do the double line. AMED. Looks something like a shooting star, yes. And it looks like it's also using the T-line as the stop. So if you're long, you have your stop down below the T-line. Roy, that's another thing that I do a lot of training. If you got stopped out, that was the right thing. You had an evening star signal. You had a lot of toppiness in here. So if you got stopped out, what was that telling you about your probabilities? It told you the probabilities were going against you. Now, what becomes your strategy from here? Well, you saw it come back up. If you saw it do a morning star, you get ready to buy if this next pattern is a J-hook pattern. There's nothing wrong, and I found this out a long time ago. There's nothing wrong with stopping out when it doesn't look good, because it might not look good for another 2 weeks. You'll be happy you have your money to go on to someplace else. But what you're looking for now, if you keep this on your watch list, is seeing if this does a pattern that takes you up into another wave 3. So what are we anticipating? Fry pan bottom, J-hook pattern. That's what we're anticipating. You don't need to get back in until you see that happen. On the other hand, too, that every time you get stopped out of a position is because it wasn't moving in the right direction. If you got that money now, instead of saying, oh man, I should have stayed in, go find another trade. You'll always have more trades than you'll ever be able to handle. You saw all the railroads get hit the other day. That's what knocked the transportation index down. You can still be buying this one. Might even be at this level. You could be buying this one on positive trading. You're not going to make a whole heck of a lot of money, but you can see that it's moving in the right direction. That becomes more obviously an option trade. What's the scenario here? If you can pretty much visualize where the resistance level is, and you see sell signals at that resistance level, where do you think your next target's going to be? At least back down to that area. So yes, you can short this one. Oh man, that's 2. Apple, not a real vibrant uptrend. But right now, all you can say is as long as it stays above the T-line, you stay long. Match, as long as it stays above the T-line, you stay long. Use the T-line as your stop. UTT we did. You can be buying this one on positive trading tomorrow. Your kind of your bobble breakout. This one, when it came back down through the T-line, even though it was a nice breakout, anticipating more upside. But what's our simple rule? If you see it trade back below the T-line, close it out. What's the worst case scenario? Comes back, tests the 200, bounces back up, then you can think about getting back in. Willow, you can see the wedge. I'd be a buyer if it breaks out to the upside. If it trades back below the T-line, close it out because it'd still be moving sideways. Disney. I'm glad you brought that one up because that's kind of the same scenario as, which one were we looking at? UNH. When you saw the sell signal and it closed below the T-line, even though this level looked like a good breakout level, when they came back below the T-line, just remember what your probabilities are. You see a sell signal and a close back below the T-line, close it out. It's not working. Pilgrim's Pride. John, this is where you ask a rhetorical question. Which way is this going? Right now, nowhere. I wouldn't be long or short this one because it's kind of sideways. Valero, another one that's sitting right here at a bobble breakout. What's your doji sandwich or your doji rule? If it opens positive, you got kind of a bobble breakout. You can be buying it. Overstock. We did this one. If it does a J-hook pattern, you can always buy it back. Right now, with it trading after an evening star signal trading down that low, I would have closed it out. Now you just have to wait for the next pattern, which might not set up for another 3, 5, 7 trading days. Solely, still not a very vibrant chart. Even though it looks like it's bottoming, you're in this mode, or this sideways mode. If you're buying on positive trading, you just have to watch to see what happens once it gets up to that level. Nothing here. If you're short, stay short. That's on TVIX. AXSM. I have I had a star next to that one. If you like this one, you can be buying it. Just watch to see what happens at the top of this trend. And PAGS, stay long. Well, what's your logical stop at this point? Anytime you're in the overbought area, what's your safety stop at today's open? What did we need to see today to stay long on this one? It needed to open positive and trade positive. Otherwise, you have kind of a bearish left-right combo. If it had opened lower, I would have closed it out immediately. Brad, that's exactly right. Which one is that? The 8, 16, 60, 65 call spread. All right, so that means if this is the potential move, or even if this is the potential move, you're getting pretty close to your $65 area. Well, buying the reason we're buying the calls outright, or the first recommendation is the calls outright, is because if it does have this move, look at the fry pan bottom, J-hook pattern. If we conclude that wave 1 and wave 3 will be the same, we don't want to cut off our potential just yet, because if it starts trading positive, you're already going to have a profit pretty immediately on your outright calls. As it moves up and your risk gets a little bit higher, that's when you start looking at some of the spreads with the anticipation that that trend is going to continue. Okay. Kept everybody over time again. All right, remember, fresh fish every morning, even if I have to stand out there in the cold. And right now, if this market opens positive tomorrow, just assume that we could be in a nice, big, steady uptrend for a while. The reason I'm pushing that concept is that we need to go jump in the lake is right. Pushing that concept is a lot of people think, oh man, I don't want to be in this with the market so high. This might be the start of another 2,000 point move. So we've got better capabilities of seeing that what the investor sentiment is doing. Which gives you a lot more confidence to be loaded up long, whereas a lot of people say, oh, I'm going to take my profits because we're in new high territory. Exactly right. There's always going to be more trades, and it doesn't matter which direction the trades are, long or short. Okay. Oh, yeah. Go jump in the lake is kind of our mantra that if it's a real hot, obviously the house is air conditioned, but if it's real hot, we do go jump in the lake and splash around for 15 minutes. Go back up, dry off, and sit in front of the computers for another couple hours. All right, everybody. Lots of good money being made in this market. Tomorrow night, I'll have a lot more graphics to show so you can see the math. But there's two functions of options. One, which is greatly improved by our analysis of the chart. But two, figuring out what is the best trade for that move based upon the time frame and the math of those options. So, number one, the analysis. Number two, the math. All right, everybody, have a good evening. We will see you bright and early in the morning. We'll see you then.